Joining us today, we have Mayuresh Joshi, Head of Equity Research at Will O'Neill, and Rujit Jain, Technical Analyst at Angel Broking. Thanks a lot, gentlemen, for joining in. Let's go straight across to our first query. A caller coming in from, or dialing in from Chennai, Mr. Balasubramanian. Hi, sir. Good afternoon.
Very good afternoon. Firstly, I'd like to thank entire team. CNBC channel is one of my favorite channels. I've been watching for years. Thanks for taking my query.
Thank you for your patronage, Mr. Balasubramaniam. If you could tell us what exactly is your stock query?
I have Trident share. I'm holding 10,000 shares. I'm a long-term investor. How long I can hold for better returns?
You bought it at 7.5 odd rupees. Was that a punt, or did you buy it at a higher price and then you averaged lower?
In fact, I bought higher price and then averaged it to the lower.
Okay, 7.5 odd rupees for Trident. Remember, this company makes a couple of textile products. Mayuresh, have you looked at this stock, and what would you advise to our viewer who's bought it perhaps at a higher price but now looking to average lower?
Afternoon, Mangalam. No, so I think we don't track this company very closely, but you're absolutely right. They are in the yarn business, which is towels and bed sheets. They export to a lot of the B2B customers in the US markets, and the utilization levels with the capex that they've done a few quarters back has slowly and steadily inched up. Because of the pandemic, because of the lockdowns, there will be inherent pressures that will be felt in the core business that they are operating out of. But they also have a paper unit that they run. And again, I think that part of the business, because of the domestic lockdown, because of the realizations issues, because of excess supply coming in from the ASEAN countries, I think some parts of the businesses are definitely going to get impacted for the first half of this year. But Mangalam, I don't track this very, very closely, so very, very difficult to give a call.
The next query comes in from Pranjal Shah, who's on the line with us from Ahmedabad. Pranjal, good afternoon. How can we help you?
Hey, good afternoon, everyone. Before I start my query, I want to thank you, Rujit sir and Mayuresh sir. Because of them, I have earned a huge profit last week. Thank you for encouraging me so I can invest in stock market. Yes.
Wow, Pranjal, that's so good to hear. Congratulations.
Thank you so much, ma'am, and thank you to CNBC team. Because of this, I am earning in stock market at my 21 years of age.
Wow,
yes, I'm starting
very, very
query.
good. So happy to hear that.
Yeah.
Now, what can we help you with this week?
Yes, I have bought 45 shares of Larsen at rupees 921. So I want to ask that should I hold or sell it now?
Okay, Mayuresh, last week's call has worked wonders. How are you going to top last week's advice with the L&T?
First of all, Sumera, I think very good afternoon to you, and congratulations, Pranjal. But always remember, I think, keep your risk reward well defined. So if you're doing short-term calls, Rujit will advise you to keep a stop loss. If it's a medium call, go for good companies with good management pedigree. Now, what you've chosen, L&T, I think it's a pedigree within itself because it's a barometer on how the entire economy moves. It's in all aspects of the business, which is heavy engineering, hydrocarbons, metro railways, defense, you name it, and the company is present. Because of the economic slowdown and execution issues in the past few quarters, the company did feel the pinch and the impact in terms of revenues. The orders have been pretty reasonable, both locally in terms of infrastructure orders flowing through and the international orders that are coming through as well. That has probably entailed, because of lower execution and slower execution and revenue recognition, working capital has gone a tad bit higher. But it's a very, very healthy and a very, very strong balance sheet to probably absorb that. And the next few quarters, it should get normalized. Similarly, I think the execution in terms of the orders at hand should suffice for the next 1 to 2 years. So there's sufficient revenue visibility. And therefore, I think leaders like Larsen, though they might underperform in markets like these, once the economy comes back on track in the next few quarters, I think it's going to be a sheer outperformer over the next few quarters and years. So for this stock in particular, it's a leader that you've probably bought. Hold on to it and keep a larger time horizon, because with execution of capital good companies like Larsen, you probably need to give time. But yes, a good selection in terms of the leadership position that you are probably going to.
Let's move on to answering one more query. We have GV Reddy writing to us from Andhra Pradesh, holds about 500 shares. of Escorts at 500 shares at 226 rupees for the last 10 years. A long-term investor wants to know whether to hold or sell. Well, wish we had him with us on the phone line, holding a stock for 10 years and making big money in a stock which has hit new highs ever so often all through this year. An extremely strong stock. Let's see whether he wishes to cash out or not. The experts will advise. Mayuresh, a big move on Escorts. He's been holding for 10 years. Perhaps the only regret he would have is not buying more when it was moving.
Yeah. Oh, absolutely, Mangalam. And it's been a stellar move for Escorts in the past few months itself. So the farm equipment players and tractor players like Escorts have actually had a huge benefit. I think the Kharif season has progressed very well, and what you probably expected to see is with a very healthy Kharif output. I think the kind of numbers that tractor makers are reporting has been extremely encouraging. Now, the second element is the large part of the capex that the company had undergone a few years back. They don't need a substantial amount of capex at this point of time. So from a balance sheet perspective, the balance sheet is debt-free. It's a very strong and healthy balance sheet. Pre-tax margins anywhere between 11.5% and 12%. Return on equity is between 15 and 17% as well. And a lot of opportunities, Mangalam, also coming in the way in terms of railways and the order book and the execution thereof as well, where the margins are pretty good as well. So yeah, I think the stock has done a stellar move over the last few months. But looking at his buying price at 500 and the kind of compounding that is expected from farm equipment players over the next few years, if he's comfortable holding on for the next few years as well, assuming his buying price, I think he can comfortably hold on to the stock.
Talking about mid-caps, Emami, that's the stock that should come up for you on your screen. A big surge is what we're seeing on that stock, almost 6% higher. Because remember, moments ago, the company reported their first quarter results, and those results seem to be much better than what the street was expecting. A 450 crore revenue is what we were expecting. The company reported a 481 crore sort of revenue, but more importantly, the EBITDA was an over 50% beat, 120 crores, as against expectations of just about 80 odd crores, and that's because the company scaled back on ad expenses and the revenues were much higher as well, at 19 times among the cheaper stocks in the FMCG space, and which is why perhaps we're seeing a big move come by on Emami itself. Let's answer some more queries then. We have Vijay writing to us from Chennai, holds about 250 shares of UPL at 550 rupees for a few years. He is a long investor, wants to know whether to hold or sell. 550 rupees, Mayuresh, UPL, again, a very volatile stock, but what would your view be?
Yeah, Mangalam, I think he is advised to hold on to the stock. I think, yes, the results were a little bit disappointing on the revenue front, specifically in the LATAM markets, where there was a lot of disruption in terms of supply-related issues. The Brazilian real devaluation also had a huge impact, and there was pre-buying seen even in the US markets. So the European performance, which was flattish to positive, got offsetted because of this, and the Indian performance at 27% growth clearly stood out. The management commentary seems very positive. So the gross margins of 54.7% that they posted, and the expectations of EBITDA margins holding up between 23 and 24%. I think that's a positive that you're probably looking at. The other positive is probably the cost and revenue synergies that the company is working out of. So they have actually achieved $247 million out of 350 in terms of the revenue synergy, and around $121 million out of $200 on the cost synergy front. Now the working capital coming down to 84 days, what you probably expected to see in terms of net debt to EBITDA, come down to 2 as per management forecast from 3.4. I think there are some positives there. But how the Latin American markets catch up and how the North American markets also shape up over the next quarter or two will define the earnings trajectory for this stock. But keeping all these perspectives in mind and looking at our own cancelling methodology, I think our own sense is that he can very well.
Right.